Hey everybody, it's Miss Morgan, and I want to go over the financial statements with you. So we're going to look at this problem. First of all, what I want you to see is in column A, this first column on the left, we have several different accounts, and then each account has a balance. And so the first thing I want us to do is look through these accounts and define what type of account they are. Now remember, we have ALORE to help us learn the account names. Those are assets, liabilities, owner's equity capital, owner's equity drawing. R is for revenue, and E is for expenses. And so first of all, we'll look at this one, fees earned. That's an account where we keep up with how much money we have earned. That means that it is a revenue account. Office expense, that's an easy one because it has the word expense in it, so we know that it is an expense account. Miscellaneous expense is the same way. We know that is an expense account. Wages expense will also be labeled as an expense account. Now, accounts payable, that represents money that we owe to other people. And so accounts payable is something that we owe, therefore it is a liability. Accounts receivable is something we're going to receive in the future. It's money we're going to receive in the future, and because we're going to receive money in the future, that is an asset. Cash is also an asset. Land is an asset, and supplies are also assets. So now that we've labeled these accounts, we can start to make our financial statements. The first financial statement we'll make is the income statement. So the first thing we'll review is what is the formula for the income statement. If you said revenues minus expenses equals net income, then you would be right. So the first thing we'll do is we'll look for our revenue account. And so our revenue account is fees earned. The balance in the fees earned account is $1,870,000. In Excel, those number signs, that means there's not enough room for all those zeros. Okay, the next thing we'll do is we'll list out our expenses. And so what we'll do here, and I think I can just copy these three expenses. And then we will total those expenses. I'm going to use the sum button up here, and that's going to total those expenses, and then I'm going to move the total over here. So the answer to the income statement is called net income if we have a positive number. So what I'm going to do here is I'm going to say this answer equals this number minus this number. And we get a net income of $391,000. So that is the income statement. And remember, the income statement is for a period of time, and so this is for the end of the year, and this is our income statement. The next statement we will create is the statement of owner's equity. Now, the formula for the statement of owner's equity is the longest formula, even though the statement is the smallest statement. So it's beginning capital plus any investments by the owner plus any net income minus drawing would give you capital at the end of the year. And I'm going to make this a little bigger here so we can see all that. So beginning capital, investments by owner, net income, drawing, and that's going to equal capital at the end of year. I'm just going to put EOY there, and beginning capital is going to be by itself there. So beginning capital, well, we have to look for that because what we're given are all these accounts and amounts. Therefore, we have to have some more information. So if you look up top here, there's more information. It's very important in accounting to always read all the information. So it says the balances for the year ended 2007 are listed below. The owner invested an additional $52,000. Okay, so there's our investment, $52,000 in the business during the year. He withdrew cash of $34,000. The capital balance as of May 1st, 2006 was $876,000. So remember, the answer is the end of the year capital account. So this is what we're solving for, is the end of the year capital account. So the formula is BIND, beginning capital, plus any investments, plus net income. Well, what's net income for the year? You would look on the income statement for that. So I'll put equals that. And then what we'll do is figure out end of the year capital. So I would say equals this plus investments plus net income minus drawing equals a bigger number than what I have here. And then I'm going to change the formatting here to the comma format just to get rid of the dollar signs up in the financial statement. So there's our end of the year capital. So now we're ready to create the balance sheet. Well, what's the formula of the balance sheet? Let me do this and merge these together. Oops. You're right if you said assets equals liabilities plus owner's equity. So the first thing we'll do is we'll list out our assets. And these assets are here. I can copy these and paste them over here. Normally cash is always listed first, so I'm going to move that up. And then I'm going to put accounts receivable here. And I'm going to look back over here. It was $417,000. And then I'm going to total my assets. And I'll draw an underline there. So there's the total assets. Then on the right hand side, I'm going to list my liabilities. And that is one liability called accounts payable for $90,000. Total liabilities, $90,000. That's a subtotal, so I'm going to draw a little line there. And owner's equity. And owner's equity is capital, end of the year, which is $1,200,000. And let's see if I can make things fit on the screen. Here we go. All right, so we have our assets on the left side of this balance sheet. And then on the right side, we have liabilities with a subtotal called total liabilities plus owner's equity. And I'm going to go ahead and create a subtotal called total owner's equity. Underline here. And that's going to be the same there. And then I'm going to move this down. Oops. Total assets down here. And then on the right side, I'm going to have total liabilities plus owner's equity. And here I'm going to say this plus this. Now, the next thing I'm going to do is I'm going to put dollar signs on both of the totals. So they both have totals. And then we want to look to see, do these equal? Because the balance sheet is correct if these two numbers equal. If they do equal, then we use the double underline at the bottom. And also, I would go ahead and use the comma format here without the decimals, just to make sure that that is even. And then I would need to figure out this font. Maybe that's better. And there we have the income statements. Let me know if you have any questions. Thanks.